So
Yep.
Todd has been down there to Butterworth Flats and gone through the property in detail. Like I said, have not been there, but I have been working with Todd for quite a while now. He's going to tell you more about himself, but he likes numbers. He likes to dig through the numbers and find the problems if there are any. But luckily, he has only been able to find good stuff on this, so that is why I'm working with him and the rest of the team. So he's going to go into all the information about this, and we're going to find out all the details so you can make a great decision if you would like to invest in our property here. So, Todd, go ahead and take it away.
Thank you. Thank you. So, for those of you that don't know me, my name is Todd Snelling. I live just north of Cincinnati in Ohio, and I am part of a five-member GP team, general partnership team, that has made an offer to buy. At one point, it was two buildings in Petersburg, Virginia. Unfortunately, due to due diligence and some of the things we discovered in due diligence, that two buildings has turned into one building, and it's called Butterworth Flats. And this is the presentation that we give to investors. This is a very unique opportunity, and I know people hear that word unique opportunity a lot, but this is not your typical real estate deal. This is not a deal where we have to go in and fix everything. We essentially have to go into this project and manage it and turn one single asset on to create a massive stream of revenue. So this is the pitch deck. You can have a copy of this. I'll make Cindy will make sure that you have a copy of it. But let's talk first about what the team wants to do. This Buttersworth flat building is essentially 45 residential units and another 17,800 square feet of commercial space. That commercial space includes 54 artist studios, which are these big, wide open offices that have polished concrete floors and this super bright lighting. And you can use this for an office. There are bathrooms in the hallway. So each of these artist lofts don't have separate plumbing, but it's a space you can rent. I'll show you some of those. Of those 54 of those, 19 are vacant. We will continue to lease those up. And at the bottom of Butterworth is called something called the Ward Center. The Ward Center is 8,500 square foot event slash wedding space. Excuse me. And we'll go through pictures of that and we'll show you why that is the key to this investment project. Um, as a GP team, we decided to show investors the returns on without including the revenue from the Ward Center, the event space, and just using the residential portion and the artist studios. And those are the returns you see at the bottom of this page. That is a great investment any day of the week. These are us just operating the residential units. Like I said, the artist studios, it's a 7% preferred return. It is a 8 to 20% IRR and a 2.1 equity multiple. If you're not familiar with equity multiples, it means you just get over 2% of your money back based on our plan of a 5-year hold. But Cindy made this statement earlier, and I think I hate to use this term, but Cindy nailed it. She said, but wait, there's more. We decided to show two different types of returns so we can show you the revenue generated. So let's talk about Petersburg. Petersburg sits just south of Richmond, Virginia. Everybody knows Richmond, Virginia, very busy city. But to the south of about 20 or 30 minutes is Petersburg. Petersburg has turned into this generally considered a B and C class neighborhood, but Petersburg has seen a revitalization in recently. I mean, as recent as this year, with these, I'll call them sci-tech companies that are coming in, like Fine Chemicals is coming in, bringing 186 jobs. But not only that, several years ago in Richmond, they voted down a casino. And Petersburg said, well, why don't you bring the casino here? So this year in March, Petersburg broke ground on a $1.4 billion casino. This casino is expected to bring in almost $70,000 to the average worker, that's their salary, and a huge $2.8 billion in effect to the community. This casino is 9 minutes from our project here. It will be a direct reflection. We've already seen evidence of that. We'll go into that in a little bit. Um, Part of that Petersburg revitalization is a thing called Hotel Petersburg. A gentleman came in and he created a boutique hotel called Hotel Petersburg. He spent $23 million on this hotel to make it look like an old speakeasy. It's got a rooftop bar, it's got an out bar, and this kind of area, this hotel kind of sits in the middle of downtown Petersburg, and it's kind of like this things are being built around this single hotel. This hotel is about 200 feet from our project. So that's why we love Petersburg downtown. I went there once. I've only been there once. I can honestly say it is a town ready to explode. You can see trucks. When you walk down streets, you see construction workers everywhere. You see signs that are coming soon. You see high-end coffee shops. Obviously, those are easier to build up. High-end delis, restaurants. I mean, you could literally see it coming. So more on this casino. They expect this casino, even though they began digging in March, they expect it to be open by the end of this year on a temporary basis. They want to start generating revenue in Petersburg. Bruce Smith, the former Buffalo Bill, went to Virginia Tech. He's the guy behind this project. This is a 200 room hotel. You'll see auditoriums or event centers, but they expect this to be the royal gem of Petersburg. And as I said, so Petersburg, I mean, we've even seen things like Legos. Legos is building a 366 million dollar distribution facility in Virginia. It's like 2 million square feet of just Legos. And that is about 15 minutes from our project. So Petersburg being this small town, you're seeing this growth. I mean, this growth is going to hit every possible of the town. So when we went under contract, to purchase this building, which is called Oddfellows, and this long building here, which is called the Butterworth Flats. During due diligence, and if you're unfamiliar with due diligence, this is when the GP team goes down there and gets their first eyes on the building. We look at every apartment, every mechanical system. We have this process that we go through where every apartment is taken. We take photos of every apartment. We look at roofs, we inspect elevators, we have the sewer scoped. And unfortunately, the roof on Oddfellows was not up to par. We asked for concessions from the seller. We did not get those concessions. So on the last day, our EMD money was non-refundable. We backed out of this deal here. It's the same seller. And we said, we'll just take Buttersworth. Buttersworth, we did the same due diligence on. There was an issue with the elevator to the tune of about $30,000 to $40,000. We received a $20,000 credit from the buyer, and we're satisfied that this Butterworth property is exactly how we're satisfied with its construction. So let's talk a little bit about what Buttersworth. So Buttersworth is an older building in downtown. In 2014, the owner came in and said he asked the federal government for money to remodel these apartment complexes. And what he did is to do that is a tough task, because when you start asking the federal government to come in and back you up, they'll say, sure, but we're going to inspect everything. So in 2014, this whole apartment complex was redone down to the plumbing, mechanical, electrical. I think I mentioned earlier, this is not a typical real estate deal where, hey, we're going to buy it at this price and fix it up, and then we're going to sell at this price. That's not what we're going to do. These are beautiful apartments that are ready to go and can be rented right now. These apartments are 100% rented. As I said, there are 45 of them. They are have a waiting list from anywhere from 6 to 12 people. Go to back up here a little bit and kind of show you a little bit about the property and stuff like that. But it's not, like I said, these are beautiful places to live. This is Hotel Petersburg that sits right next to our place. This is the renovation this guy spent $23 million on. There's a rooftop bar. There is a bar in the lounge made to look like a speakeasy. All the custom woodwork was redone. It is a beautiful property. Petersburg, Hotel Petersburg wants to be a central figure in Petersburg. So much as they built out this website and they started advertising for meetings and events, happenings. This is what we could put on, certainly. But the biggest room available in Hotel Petersburg is 800 square feet. It is not big enough for a wedding venue. I'll follow that around. It's clear that Hotel Petersburg needs a wedding venue. The area needs a wedding venue. It needs some type of event space. They even put a woman in a wedding dress. But there is no place big enough in Hotel Petersburg. So again, back to the property. There are 49 units. They're completely built out. I'll show you pictures in a little bit. The average rent is $1,400 a month. Fully rehabbed in 2014, so we're not going to go in and do a lot of repairs. We are currently getting calls, or I shouldn't say we have a good working relationship with the seller. This seller is currently getting phone calls to house these construction workers of the casino, but we don't have the space. Since being under contract, we are up 3% on the rent roll, or $2,300 a month. That is just being under contract in the last 3 or 4 months. That is the example of how this area is growing completely through the roof. Again, the Butterworth Flats, the first number we will show you is just the operating, the 45 units and the 54 artist studios. 19 of the artist studios are empty. We underwrote those at $75 a door. That is an incredibly conservative number. You'll see why in a minute when I show those to you. But here's the thing about the event space. The event space, which is completely built out, generated almost $200,000 in 2016 and 17. At that point, just prior to COVID, the owners and his wife got tired of operating it and turned the event center into an art exhibit studio. It's just a donation to the city. It generates almost no income. Our intention is to turn back on this wedding venue, monetize it, and one of the things you will see the difference between operating just the residential units and the event space. We'll show you the two different things. So these are the Butterworth Flats. These are upper middle class to upper class apartments. Some of the hardwood here was kept. It was refinished. Under cabinet lighting, over cabinet lighting, granite Corian countertops, full washers and dryers in all the apartments. These are nice places to live. They were fully remodeled. As I said, we've even inspected a lot of the mechanicals. It is a very impressive. So in the bottom of the Butterworth Flats is an example of some of these artist studios. These are big, wide open spaces with glass doors that you can rent. They vary in size. Tip rents go anywhere from $150 to $250 and up. This is an example of what some of these artist studios look like. You can see that when these things were done, they all have separate entrances from a central hallway. That hallway is key card protected. This was done right. You can walk in from your parking lot, swipe into one door, then go into your office. We see waxing studios, recording studios. There were a couple therapists in there. There were a CPA in there. This here was beautifully done, and it was well crafted by the owner. At the very minimum, if no business wanted to rent it, I could rent these for storage space for $150, $200 a month. Everybody knows what it costs to rent a storage space. This is the video I took at the bottom.
Todd, are these underground?
So I keep saying at the basement. No, this is all, they're not underground. Well, there's a backside that does go into the basement. These are the lower level units, excuse me. Yes. The building goes up. The artist lofts go from the basement to the first floor, where the first floor meets the wedding venue, which I'll show you next. And I'll show you a better picture there. And this is the wedding venue that we've been talking about. I call it a wedding/event space. This space generated almost $200,000 in 2016 and 17. As a GP team, we decided to say, okay, let's make sure people understand that this is not an asset that's turned on now, but day one, we're going to turn this asset on and generate more revenue. That first number you saw, the 19, 20%, that's operating only the residential. This is the new wedding space that generates no money. However, the cool thing about this, it's completely built out. There are tables, there are chairs, it's permitted. The lighting and electrical is there. It is a beautiful facility. This is the other picture. And Cindy, this kind of would help you. Behind this door here are a whole bunch of the artist studios. There are some up here, which this part is here. We call this the bridal suite. So one of the things we'd like to do is host, like we said, weddings here. There is a commercial, not a commercial kitchen, but a commercial, if you brought in catering, there are commercial kitchen equipment to help with that catering, a chiller, things like that. This here, we anticipate being something like a bridal suite. We have a groom suite, and then the bride could walk down the steps. And I'm the first to say that, hey, you don't want me planning your wedding. It's not what I do. But obviously, the play here is to do a master lease option with someone who is a wedding planner. The average wedding in Petersburg for the event is between $7,000 and $10,000 an event. So what we decided to do as a GNP team was said, let's just assume that we only do one wedding a month. Let's do a master lease option for someone who's going to do one wedding a month. $10,000 a month times 12 is $120,000. We wanted to show again the two types of returns. We were there last week. I was not there, but my partners were there last week for lender inspections. The lender inspection is just when the lender comes in with his appraiser, his numbers guy, and make sure the deal makes sense. The guys were standing in the event center talking, and the owner's wife told her that she gets 3 to 4 calls a week to put events on at the space. And while they were there, a lady actually knocked on the outside door asking if it was available for rent. This demand is unheard of in Petersburg. I showed you, that's why I showed the picture from Hotel Petersburg. There's a woman in a wedding dress, but no place to have a wedding. And so one of the things we wanted to do, like we said, is to show the two different returns. This here is a $50,000 investment with no value add. We call the value add the additional $120,000 from the wedding venue. So your average return on a 5-year hold is above 20%. Your equity multiple, you'll see in a little bit, is 2.11. Our plan is to sell this in year 5, but if the returns go through the roof, we would certainly sell it a lot quicker. Whatever's the best for the investors.
Can I interrupt just a sec
Yes.
there, Todd? So for Michelle and the other folks who don't, they're just looking at this for the first time.
Yes.
The way this works is we have this, I don't know, can you see my cursor?
No.
No, okay. So in year 1, yeah, there you go. That is the project cash flow for a $150,000 investment. So if you invest 50,000, you will get approximately 29.34 for the year, and that comes in quarterly distributions. So that is year 1. Then year 2, you're looking up what that's not quite doubling, but close to it. And then year 3 and 4, you obviously see the numbers. So over the next 5 years, you would make 35,746 in distributions. Is that correct, Todd? Is that what that bottom line adds up to?
Yes. Yes.
Oh, it is. Okay.
Uh,
No, I don't. Is that right?
So let me explain a little bit. So it's not just that number, right? So the way
Mm-hmm.
this is year 1, this is year 2, year 3, year 4, year 5, you still get this number, right? And then we say, okay, these are your annual returns, but sorry, my mouse is bouncing around there. But then we decided to sell the building. So for $50,000 investment, you get this money here in year 5. You've already gotten these. You also get this number, 29,364. Okay.
Mm-hmm.
Now, on top of the annual returns you made, we give you your $50,000 back. So that number that you get back, you've invested $50,000. You get the top numbers across there. And I'm going to show this in a different way that may make better sense to you. This is just a percentage of calculated returns. This is from the disposal of the asset, whether it's a refinance or a sale. This is money you get back as being a partial owner in the building, and your original investment is back. Okay. Let me show this another way because I think this may show it a little bit better. Maybe, maybe not. Okay. So when we look at the rate of return on your investment, you put your money away. This is what would happen. Your average cash on cash would be 10.52. That is the average of these numbers right here. Okay. So your annual return would be 222.26 over 5 years. Okay. Your equity multiple is 2.11. That is the sum of your cash flow, your profits from refinance, plus the money that you had in. Okay. That is without the additional cash from the wedding venue. That's just operating, like we said. That's the first set of numbers. The second set of numbers get a lot more interesting because we've assumed that we can do one wedding a month for 12 months and we add $120,000 to the bottom line. Keep in mind, there is no relatable expenses to this, or there is very minor. We're already paying utilities on that portion of the building. If we generated another $120,000, 10,000 times 12, which is a very conservative estimate, the numbers kind of go through the roof. Your average annual return becomes almost 37% because there is no, like I said, correlated expense to that. Shown another way, Cindy, this is kind of what I was trying to get at here. I don't know if this clarifies things. This is at $100,000. A lot of people like dealing at hundreds as opposed to 50s. So if you deposited $100,000, the first year you would get $5,800 in quarterly distributions. The second year, you would get almost 10 to 11%. That would be your quarterly distributions. Third year, you'd get this. Fourth year, you would get this. 5 year, you would get this. Okay. On the sale of the disposal of the asset, the investor would get this portion and his original $100,000 back. But once we activate the Butterworth building, look how the returns go up. 8,300 as opposed to 5,800, 16,000 as opposed to 10. These would be your yearly distributions, and this would be the percentage gain on your money. In year 5, you either refinance or sell the asset. 143, you get that back, and then you get this back. Does that make sense?
Yes,
Is
certainly
that
does.
clarified better?
Yeah. So,
Okay.
yep, absolutely. Makes sense to me.
Yeah, and this is kind of the number that we wanted to show people. Look, these are the differences, right? This is how, when we underwrite a deal, this is how we build out the income on our pro forma. We looked at expenses and everything else and stuff like that. But when you add $120,000 to which is very conservative, to the bottom line, this is where the returns skyrocket. So if you could add 2 weddings a month, that number would be $240,000.
Hmm.
And you can see it from there. But we were kind of stuck as the GP team trying to explain both numbers to the investors to show them that dramatic increase. We wanted them to understand this space. This is the team. Everybody here has experience in real estate. Marco actually lives just outside of Petersburg. He has investments in Petersburg. He and I will take care of the asset management. I'm the numbers guy. Marco is boots on the ground, and he can be there in 30 minutes. We have identified a property manager, and we have already drawn up a contract for the property manager. It's not signed just yet. We're going back and forth on a couple details. They will operate the building for us. Marco and I will stay on top of them through, it'll start out probably with weekly meetings or bi-weekly meetings, and then maybe monthly meetings. There's me, there is Tim Vest. Cindy can speak on Tim Vest. She's been involved in a lot of his deals. He is the advisor on this deal. He's also the one that's going to help us arrange for the debt. Certainly Tim's a mountain of knowledge. I don't even know how many doors Tim has to use Cindy at this point.
I don't know at this point.
Yes.
2,000?
Yeah, I would say it's probably something like that. But I mean, he's the guy that we can pick up and call and say, hey, we've got this going on or whatever else. Dennis has a very strong real estate background. He's kind of the leader of this deal. Um, and this is kind of where your money goes. And we try to show people this. This is what we need to raise. We need to raise $1.8 million. The debt is in place. The debt comes from CBRE Financial. They have already signed off and said this is a good deal. Like I said, they did their lender inspections. The down payment, the acquisition fee, the reserves, and closing costs. So when we underwrite a deal, we are all in. We account for all kinds of reserves with related to CapEx, what the debt, what CBRE may want us to put back so many months of loan payments. They may want us to hold back insurance. We've already accounted for all that. So when I say we're all in, we're all in. We've accounted for everything. We've looked at things. We've looked at all the expenses. And that's kind of it. I mean, there's the Butterworth Place, the Ward Center's at the bottom. I'll finish with kind of the pictures of this beautiful event space. Um, it just needs literally somebody to say the word go, which
Yeah.
is what we do. Again, this week just solidified where we're at with this investment and meeting with the owners and stuff like that. She's like I said, she gets 3 to 4 calls a week, and she's like, I don't even advertise it.
Yeah. Well, one of the things I was going to mention as well is this is what we call a 506B offering, and that means that we can accept accredited and non-accredited investors. Our minimum investment on this is 50,000. So we have shown in here the table and the numbers if you were to invest 50,000, what it would be. And then also, Todd, can you add what is the deadline? What are what's the time frame
Yeah,
on
so we're trying to finish that and be fully raised by the end of mid 25th of June, I believe, because I believe we're first week of July close.
Okay.
That last week to close is a nightmare generally on the real estate deals like this. There's a documents needed, there's something else needed, and it's like, hey, we didn't get this. Yeah, you did. Emails are flying back and forth. So we hope to get hard commitments, have our portal is set up for soft commitments. We hope to have hard commitments by the end of the day tomorrow, being Friday. We'd love to have them for the weekend. We think this thing starts to pick up really good at the hard commitments. I think we have about 350 in soft commitments from people. If you soft commit, you are guaranteed to be in. Those are the first people who have dibs. Um, so Michelle, I know I've been through that stage with toddlers. Is there anything that I can answer for you, or Cindy, is there anything you think I need to cover?
Yeah, so you just said that you had 350 in soft commitments,
Yes,
and the total number that you're looking to raise is 1.8ish
yes,
by essentially what, in 2 weeks?
yes,
Yeah.
yeah.
um
This is where it gets stressful, Michelle.
I,
yeah.
we've done this before though. This is what
Okay.
I do.
But what happens in the event that we're June 25th and you don't have the full commitment?
So June 25th, closing is the first week of July. So I said June 25th because that last week is crazy. You can
Right.
ask for an extension. You can ask for an extension from the lender, for generally it's for a fee or whatever else. But I think at that point you have to be realistic. Then, can you raise this money? There's a big difference from being $1 million off and being $200,000 off, right? We also believe that one of the things we're waiting on, Michelle, is the appraisal to come back. If that appraisal comes back pretty strong, which we have every indication it is, and I mean strong because it's going to be well above our purchase price, that may
Mhm.
shift our need to raise capital because we would be able to borrow more debt, if that makes sense.
Right.
Uh,
Yeah, no, it does.
yeah,
Yeah.
exactly. So I say mid June just because that last week I don't want to chase money.
Right.
Can get extension on the PSA. But I think at that point you have to be real realistic as a GP team. Like, a lot of people on this GP team saying this has been a tough race just because of the way the economy is now, and
Right.
you know what I mean. And I get
Well,
it.
that's why I asked, because I feel like for right now, everyone's just kind of like holding on to their wallet, seeing what happens in the
Yeah.
market, like every single
Yes.
day. Um, Whereas like I feel like right now is a good time to get in on those deals.
Yeah.
Yes.
But like if I came in at 50,000, for example, and you're short, 600,000, then what to close?
Well, at that point, either, I mean, I would hate to do it. I mean, you would get your money back.
Right.
I mean,
Okay.
yeah. If that's what you're asking, absolutely, you get your money back. Uh,
Okay. Yeah. Yeah.
you become a part owner of this building.
Mm-hmm.
Right. Yeah.
When you go into, are you familiar with what like a portal does, an investment portal does?
Yeah. Like a deal room.
No. So let's say you come in at $50,000 and you sign up for what's called the documents, what they call is going to hard commit, which means you're going to deposit this money. It's going to be wired into our accounts. You get back these legal documents that says you are the legal owner of 50 units of the Butterworth Flats. This is a legal document that, it's just like a deed in a way. I mean, I hate to call it a deed, but this is an SEC filing in which you are a shareholder and part of the building. Okay. The building, if we go bust, right, you still have entitlement to that building for your credits. And they call them credits, which is kind of a goofy way. That's how the SEC calls them. And when you get these documents back, that's what it'll say. Michelle has 50 credits
Mm.
of Butterworth Flats. Each credit's worth $1,000, and we do 50 credits minimum. Does that answer your question?
Yes.
Okay.
And
Yeah.
are you do you have any other meetings that you're doing to get the word out to other investors?
Yeah. So I've talked to a ton of people, but this is how it goes, right? Some
Mm-hmm.
people want to see the deal 2 or 3 times,
Yeah.
or they want to meet privately because they have their own personal thing they're looking out for. Some investors want cash flow. Some investors want depreciation. Some investors want to make sure that I'm not crazy. You know what I mean? They want to see my face. They want to know who I am. They want to know who Dennis is. We have a gentleman who wants to meet with who may come in at 400,000, but he wants to meet with another member of the general partnership, rightfully so. So yes, to answer your question, it's a long answer to a short question. Yes, we do anything we can to make people feel comfortable. We know it's a risk. You don't know me. I'm not asking you to trust me. I'm trying to make it so I learn about you and what you need and how you would feel safe from this investment. I had a lady ask me the other night, it was an interesting question. She said, "What about that floor? That floor looks terrible on the Buttersworth event space." And I said, "That floor was probably the original floor when it went in. It was refinished. Like there's people paying top dollars for floors like that. I mean,
Oh,
it's
I
gorgeous.
love that.
Just
I think
just
it
because
looks
you don't know."
right, exactly. One of the other things that I was going to point out, and you were talking about, Michelle doesn't know you or whatever. Um, and part of what I do, Michelle, is
Mm-hmm.
when I raise capital, I don't just raise capital for anybody because this is my reputation on the line as well. And so I believe in Todd and this team, and I know them. I know where to find them, right?
Mm-hmm.
And I have built a relationship with them. The other thing that I really like about Todd is he is a people person and if I call him, he is available, and he will be there and he really wants to make sure that the investors on this project have the ability to get a question answered quickly and have information going out more often than most because there's a portal and then that's kind of where things flow through, I guess you could kind of say, but also you could do like a quarterly newsletter or something and not you, but the GP team will do. But I think Todd said he may want to do that more than quarterly just because he wants to keep the investors up to date on what's going on. And that's something that I really liked
That's a
about
great point.
Todd.
And I probably need to go into that. So you'll have an investment portal that you'll sign into. Rather, you're going to log in, you'll see your investments. Generally, communications come from the general partnership team quarterly with your distributions, right? So, hey, Michelle, GP team's weighing in here and stuff like that. This is what's going on. I'm hearing in a lot of real estate deals that is not being done. So my intention is to not only send the quarterly um, investment out through the portal, but it's also to email people like Cindy, yourself. Hey, it's Todd. This is what's going on. And it may just not be any news whatsoever, but hey, closed on the building, met with Peak Property Management. Elevator got fixed. That it's a pain in the butt elevator, but it needs to have this or whatever. So you know what's going on with your money. I keep hearing from people, including people who want to invest, that they are pulling their money from one deal, maybe into my deal because of the lack of communication. I speak to Cindy, what, Cindy?
Every day, pretty much,
Sometimes,
almost.
yeah. We have an ongoing goal call Sunday mornings, which sometimes we just say, hey, anybody know how to get this done? You know what I mean? So
Mhm.
it's, I'm not an arm's length or at arm's length or whatever that term is. Cindy has my number. She texts me. If you have questions, you come from her. But my goal is for you not to have any questions at all. You'll know
Right.
what's happening. And really, you're kind of invested in me as opposed to the project too. So I can tell you a little bit about myself if you want to know, um, just so that you know that I'm not some type of maniac or whatever. Um, I grew up in a small town called Middletown, Ohio. If you're familiar with the Hillbilly Elegy book, and no matter what side of the political fence you're on, it's the same hometown as J.D. Vance. Um, put myself through parochial school, put myself through college, got a kind of a triple major in accounting, finance, and management, did corporate public tax, um, did auditing, did commercial lending, true nerdy stuff. Um, and then at the age of 30, after my father passed away of cancer, I said I couldn't sit in a cubicle anymore, and I became a police officer. I've been doing that, investing in property for probably 23 and a half years. I spent, um, I've been promoted up until lieutenant. I was in charge of almost 40 guys. I spent 10 years as a hostage negotiator, um, SWAT call outs, bank robberies, hostage situations. Um, Married with two kids. One I'm taking to college orientation next week in a stunning turn of events. Um, and that's a little bit about me.
Yeah, I love that.
Yeah, thanks, Todd. Thanks for that.
Yeah.
Yeah, he's got a great background. And I was telling somebody about you the other day, and they're not here. I'm disappointed. I'll have to call him. And he was very impressed with all of your background. So, and this guy lived in Hong Kong for like 5 years.
Oh, really?
Yeah, doing stuff I can't even describe. But
Yeah.
anyway,
Yeah.
so yeah, so that's all good stuff. And that's one of the reasons that I plan to stick with Todd too and raise capital for the next deal as well. So I think when you meet people that you can work well with, that's kind of what you do is you form a team. And that's what he's done with the other GPs is they've formed a team and they know they can count on each other. So that's just a little bit about everything. Do you have another question, Michelle?
Not right now, but I would love to look through the deck. Um,
Okay.
and I'll do like a little due diligence myself and then circle back around